Welcome to Thought Leaders, featuring interviews with some of the best minds in the industry. Today's special guest is popular platform speaker and syndicated financial columnist, Ike Devji. Hello everyone, I'm Steve Savant, syndicated financial columnist and talk show host. In this segment, we're talking about why advisors need to know the risk factors of asset protection planning, all from Ike's articles and contributions to Optimal Financial Health, the Doctor's Essential Wealth Management and Preservation Handbook. Well, welcome again. Ike, we've been talking about asset protection, and I have to say, when we're talking about it, and I'm sure this is a revelation to our audience, this is not the same thing that we usually think about. I'm always thinking about the basic life insurance and disability. I'm handing off to my property casualty counterpart other issues, maybe the office protection for the HR, maybe for some basic rental insurance. I don't really get involved in things like that. But when I think about it, if I'm actually taking care of the assets and trying to grow the assets of my client, I have to figure out the other side and play defense a little bit here.
I couldn't agree with you more, Stephen. Thanks for having me back. Let's look at what happened after 2008. How many of the most successful people in this country had very significant changes in their financial position and had that money taken from them by force or through losses in the market or a combination of real estate losses and lawsuits that happened, among and between partners in every other way possible. So yes, it had a very real effect on the people that financial advisors protect. It had a very real effect on the folks that we protect as attorneys on the other side of the fence, if you will. And it was an important combination of those things that took a lot of people by surprise. And obviously, if you are someone who advises a number of high net worth clients and all those people lose a substantial amount of wealth, well, that has a very real effect for you as the advisor as well.
Well, there was huge lawsuits back in 2008, and especially post 2008 and 2009 because of this. Now, when I'm looking at these risk factors, these are a lot of factors here. And I'm thinking, I was going to do the David Letterman top 10 risk factors that you have, but these are 10. And, I'm thinking of some of the people you've already talked about. High net worth, high liability, people that are exposed to more than normal. And like you're giving, especially in your area, since you're physicians, that's your real area of high forte. You're looking at people that are into Major League Baseball, football, rookies that are just entering into real wealth. Those are some of your big ones.
Or someone just starting a business, right? This person has worked very hard, gone through capital raising and borrowed money in many cases and bootstrapped themselves into a business. They're never going to get there if we haven't done some of this work and had some of these discussions on the front end.
And we're going to talk in a couple segments from now. We're going to talk about, is this just for wealthy people?
No, and it's not just for wealthy people, and it's not just for people who advisors typically think of as high risk. Right, so maybe the average attorney or financial advisor will say, I don't know if my clients need to worry about this. My client's not a brain surgeon or a heart surgeon or whatever some other stereotypical dangerous profession is, right? If you look at this risk factor list, this is a list of some of the risk factors that people who should consider this kind of planning and who should have this conversation with their advisors have. And if you look at it, well, it's really not that exotic.
No, I was looking at the second one. They drive a vehicle and own a home.
Right. So every single person watching this who has a car and has a family and has their spouse and their kids in those cars, they own a home where they have guests come and go. I did some research on just that issue. 11 million car accidents a year in the United States that produce 40,000 fatalities a year on average. So you got 40,000 people who are killed in car accidents every year. How many of those unfortunate tragedies do you think are accompanied by a seven-figure lawsuit? I'm guessing a number of them. They're a board member, officer, director of a public or private business. This also applies to charitable boards, school boards, your kid's school board, the board of your church or religious institution. All of these produce a significant amount of liability.
So if you joined any of these boards, you have exposure.
Absolutely you do. If you're a board member, you're responsible for the actions of the board, and you need to make sure that the board is carrying D&O insurance, which is directors and officers insurance. Now look at this next one. They have assets that would be difficult to replace if lost or reduced. How many of us have clients that have worked very hard for many years, and if they lost some or all of that wealth, wouldn't be able to replace it? Any business owner that has employees, Employees are one of the highest sources of risk to the American business owner. You're 5 times more likely to be sued by an employee than anyone else. You own your own business, or you have professional liability for what you do. You as an advisor, me as an attorney, a physician, any licensed professional. Lots of us have professional liability, whether we hold that professional license or not. They own liability generating assets like investment real estate. That could be a rental home. It could be an entire portfolio. They're visible, right? So, for instance, the professional athletes that we protect, or a successful cosmetic dentist whose billboard has her face all over town, and people know her name and her face. Do you think people assume that she's rich and collectible? They have children, spouses, and other extended family in their homes and driving vehicles. So if, obviously we have all of those issues. And this last one is a big one. They are selling their business and replacing recurring income with a lump sum. Now, you and I both know that in the advisory world right now, one of the hottest buzzwords and top marketing issues is everybody is suddenly a succession planner, or has added that cachet phrase to their business. Well, I'll tell you what, Mr. Advisor, if you are helping somebody through that process and they're replacing X dollars a year with one lump sum, you better make sure that that lump sum is protected, because that bucket is not going to be refilled. Also, remember that even if we have a client that's made a huge amount of money, let's say $1 million a year or more, and it could be less, there are many successful people, let's say they're making a couple $100,000 a year. Whatever that number is, they have never had, in most cases, a check for that large a lump sum put in their hand. And once they get that, it's finite. It is not going to be replenished from income. So that's a big deal. And one of the things that we're most worried about there is the buyer. Remember, if the guy who buys your business isn't as cute and smart and hardworking and doesn't have your bedside manner, he will come back to you with the broken pieces of your business and his own team of lawyers, claim it's your fault for some act, omission, concealment, whatever, and he's going to want his money back. Now, where does that leave your client who has spent 30 years trying to become who they are and build that business that had that value?
And these were not deep. This is very basic information here. And look at the exposure.
Absolutely. And just look, if everybody watching this, probably, I would guess 3/4 of these risk factors apply to every single person watching this. So where does that put that old argument about, I don't need to worry about this, my clients are good people, they don't do anything risky, they don't have a high-risk business, they don't have a high-risk profession. They do a lot of other things that could make them insolvent on a daily basis.
Well, listen, for more information on the risk factors in asset protection planning and how this information can actually help you expand your business, just click on the landing page address in the video description. We'll be right back with more from IDevG.
A solid web presence has never been more important to the success of your business. Introducing Agent Website Creator, provided by CreativeOne. Through Agent Website Creator, you can create your own personalized website and have it up and running easily with zero knowledge of programming. Choose from several designs with easy drag and drop customization. Get proven lead generation offers, professionally written articles, and helpful financial calculators. Plus, the ability to embed videos, integrate your social media, and more. Update your website anytime and show the world within minutes. The best part? It's hosted for free. To learn more about Agent Website Creator, call your CreativeOne sales team at 800-992-2642 or visit us online at creativeone.com.
In this segment, we're addressing the 4 vital questions to ask your client about their wealth, all from Mike's articles and contributions to Optimal Financial Health, the Doctor's Essential Wealth Management and Preservation Handbook. Well, again, we're coming back to basically looking at these questions. These are really they're meant to uncover and disclose a client's position. And I kind of like this kind of Q&A. We're almost pastoral in the way we're approaching this. We're asking these questions. And here are your 4 vital about protecting your wealth and success. You came down to these 4. Why are these 4 big?
Well, Steve, we had to help clients and the advisors that we work with. Many of the clients that I work with as an attorney are actually sent to me by financial advisors all over the country who are educated on this and who are worried about protecting their clients. And there are a couple of different things that happen. One is that advisors will often approach a client and say, hey, what have you done about your asset protection planning? And as we discussed in a previous segment today, one of the answers you'll get is, oh, I have an umbrella policy. The other common one, which is also wrong, is, oh, I've got that taken care of. I've got a trust. And in most cases, what the client was referring to is a revocable living trust, a common estate planning tool. It's a fabulous tool. It's a great tool. I use them every day. But it is not an asset protection tool. It is a death planning tool. It's a fancy will. So when we start asking clients to consider the finite and fragile nature of their wealth, especially in the current economy, especially clients who are successful have often spent 20 or 30 years getting to where they are and don't have another 20 or 30 years to replace it if they lost it, right? How many 65-year-old guys who built a $30 million company or a $2 million company through 20 years of hard work could do it again at 65 or 55?
Not many.
Not many. So we start asking clients, for instance, if you lost a significant portion of what you have today, given the economy, your current income, your age, the number of years you have left, how long would you be solvent? How long would you be solvent both from a very hard dollars and cents kind of analysis where you could pay your bills, and solvent in the sense of how you have a bunch of plans and dreams and hopes for your family, your kids, your grandkids, your legacy wishes, putting kids through college, funding your retirement, making contributions to retirement plans that guys like you have spent a great deal of time structuring to meet those goals. How long are you going to be able to do that if that cash flow tap turns off, or if somebody comes and takes a big bite out of what you've got? Right? So that's a big question that many people have never been presented with before. The second one is, have you consulted with a qualified counsel to help manage your professional risks and talk about, what are the specialty kinds of insurance I should have, and what are the legal tools I should have, and what's the proactive defensive planning?
And you just used a code word here. I didn't know if you meant to or not. What is qualified counsel?
Well, qualified counsel means somebody who's actually experienced in this area, who understands the role that attorneys play and that lawsuits play in people's solvency, that has a significant amount of experience in segregating and managing and identifying risk, right? So lots of people have added this sort of asset protection adjective to their websites over the last few years. We've got a bunch of underemployed estate planners who are newly minted asset protection experts. And look, everybody starts somewhere. God bless them. I hope those folks do a good job and get the education they need. But we do see a very wide range of skill level. And so qualified means somebody who's been there, done it time and time again, and who can talk about more than just the legal tools they sell. Right? I mean, you and I are having a multi-part conversation on asset protection, and we're not talking about any legal tools at all. We're talking about all of the things that should be done in front of or ahead of those tools. If the counsel that you're talking to doesn't mention risk management, doesn't understand the specific exposures of your client's business, your client needs better help. The third thing that that we often talk about is, do you have assets that would be difficult or impossible to replace given your age, health, and the current economy, right? I mean, we talk about that guy again who has, or that lady who has spent years building her practice or their business or their chain of restaurants or whatever it is. We find that many folks, and this is certainly true of my own client base, which is national, as you know. We have a couple thousand physicians we work with, another couple thousand business owners. So it's a wide range of people with different backgrounds and opinions. Most of them don't feel that they could replace their life's work at this point in the economy in our country. And finally, are you financially and legally prepared for a lawsuit that's either uncovered completely or which produces verdicts above the limits of the insurance coverage you have in place? This we're talking about gaps. And I talk about gaps in two areas: width, which means the number of things covered, and depth, which means did we have enough dollar coverage in place? We often find that, for instance, we see that lots of educated, rich people and financial advisors. I was teaching to the Colorado FPA last week in Denver. Most of the financial advisors don't have a personal liability umbrella on their auto insurance. So if they went out and got in a serious car accident, they would be limited to the couple $100,000 that their policy provides. Now, what if you, God forbid, or your child was involved in a fatal car accident that produced a verdict of a couple of $1 million? Where are you going to get that money from? And maybe that $300 a year and the umbrella policy would have been a good idea, but at that point, we need to have some better planning in place. And we find that most people, most successful people say, if I got hit with a significant lawsuit or had a big loss, I don't know what I'd do. I would be worried. I'd be terrified. And by having these conversations at the right time, we can help folks hope for the best and plan for the worst. That's the best we can do.
Well, for more information on all these vital questions that we're talking about that you should be asking your wealthy clients and prospects, just click on the landing page address in the video description. And for more information on our shows, seminars, and workshops, just follow us on social media or visit us out on our webpage. I'm Steve Savant. We'll see you next time on Thought Leaders. And remember, keep thinking outside the box.